So you don't want to be the guy in the cartel who's short Bitcoin when it's about to make a 10x move. So it's very difficult to maintain that cartel in a Bitcoin scenario.
Welcome to another insightful analysis, where we delve into the wisdom shared by Max Keiser, a renowned figure in the world of finance and cryptocurrency. In a recent video, Keiser offers profound insights into the revolutionary nature of Bitcoin, its impact on global finance, and the ongoing battle for individual sovereignty. Join us as we unpack Keiser's perspectives and gain a deeper understanding of the transformative power of digital currencies. Keiser begins by highlighting the groundbreaking significance of Bitcoin, emphasizing how it severs the traditional link between money and state control. Unlike conventional currencies, which are prone to centralization and manipulation, Bitcoin operates on a decentralized network powered by a revolutionary consensus mechanism known as proof of work. This fundamental shift empowers individuals with unprecedented control over their wealth, transcending the barriers imposed by traditional financial systems. One of Bitcoin's most revolutionary aspects, according to Keiser, is its role as a savings technology. Unlike traditional assets that require costly security measures, Bitcoin offers a simple and cost-effective way for individuals to safeguard their wealth. By relying on cryptographic keys rather than physical vaults or security personnel, Bitcoin enables anyone, regardless of their budget, to store and protect their assets with minimal effort.
Bitcoin is that for the first time in history, it separates money from the state, or it separates money from any centralized control whatsoever. So money becomes something entirely different than we've been used to in our entire history as humans on this planet. Most of the time, we have two problems with money. One is concentration of power or concentration of wealth, because money throughout history has been pretty much what's called proof of stake. If I have a lot of money, I have influence, and I can change laws to make it easier for me to get more money. It's corruption, and it's because of the nature of the money that we've had for millennia. And the same applies to gold, by the way. But with Bitcoin, it's a system called proof of work. It's not proof of stake. And no matter how many Bitcoin anybody has or any organization has, they have no influence at all to change the protocol. So it's very egalitarian in that sense. And it also, for the first time, is a savings technology, which has a huge impact on folks. It's the first time in history that anybody on any budget can store their wealth, and it can be unconfiscatable, and the price of protecting that wealth is virtually zero. If you look at how wealth is aggregated today, usually those with a lot of wealth spend a lot of money protecting that wealth. They have security guards, they have vaults, they have a lot of lawyers, they have a lot of accountants, there's a lot of politicians, right? There's a huge cost to protecting and maintaining that wealth. Well, with Bitcoin, you don't need any of that. You just have to memorize your seed phrase. That's it. And that's available to anybody. Right, well, clearly CBDCs, central bank digital currencies, are on the other side of the fight toward individual sovereignty and freedom. Because CBDCs are highly centralized, highly controlled. It's the fiat money on steroids. It's fiat money, everything you hate about fiat money, but much worse. And so that's clearly on the battle it will be fought against central bank digital currencies. And I think that what we can look for and what we can be helpful about is that the battle is going to be all about energy and energy use. And Bitcoin uses a lot of energy. We know this. And so do CBDCs, so does the military use a lot of energy. So does AI, artificial intelligence, use a lot of energy. And we want most of the energy, or all of the energy, we want it to be hashing Bitcoin. So Bitcoin and the energy used by Bitcoin is the energy that gives everyone individual sovereignty and freedom, and the ability to opt out of the monetization of violence and to opt into the monetization of love or the demonetization of violence. That's what the energy usage in Bitcoin allows us to do. And the good news is, if you look at the amount of energy that Bitcoin uses, what's called the hash rate, it's absolutely skyrocketing. And it's never been in a bear market, really. It's been going up for 12, 13 years. And that tells me, from a spiritual perspective, that the forces of good are throwing energy at Bitcoin as a way to fight against evil. And I think today, if you were to look at the amount of energy that Bitcoin uses and the rate at which it's increasing, you would say good is triumphing over evil. So this gives me a lot of hope. And I don't think centralization in anything works at all, except cancer. Cancer is the only thing that seems to work to be overly centralized and parasitic. That's the cancer model. But I think we're going to win against the cancer of CBDCs. With the gold cartel, you need participation of everyone in the cartel to keep the price suppressed, because they all get to make a little money doing that. There's a natural buyer of gold. Gold always has a buyer. Central banks are always in the gold market. So you know pretty much that the demand for gold is pretty much omnipresent. There's always some demand for gold. If you can go into the market and manipulate prices using derivatives contracts, which in this case would mean counterfeiting sale orders to drop the price discovery mechanism by counterfeiting and putting counterfeit sell orders into the market, which drives the price down, you have the ability then to just sit back, wait for the natural demand to come in, which there always is demand for gold, and then ride it on the way up again. And this seesaw back and forth is how the gold cartel is able to book, 1 or 2% a week trading gold. But if you leverage that, you're making 30 or 40% a year, but really with no risk at all. And the way that the cartel sustains itself is that everybody in the cartel knows that the possible risk to them would be a sudden price spike in the price of gold. Like it went from 2 to 20,000 in a day. If that were a possibility, then you would be very difficult to maintain a gold cartel, because that risk would be very tempting for somebody to break the cartel and take advantage of that risk. You see that in OPEC all the time, the OPEC cartel. It's hard to keep it going because there's always one player who breaks it and wants to just make an outsized gain against the cartel. And then they can say, well, let's go to war. They go, no, let's bring the cartel back. Don't be such an idiot. And that's been going on really for 50 years.
Keiser warns against the rise of central bank digital currencies, CBDCs, which represent a stark departure from the principles of individual sovereignty and freedom. Unlike Bitcoin, which operates on a decentralized network, CBDCs are highly centralized and subject to government control. Keiser predicts that the battle for financial freedom will center around energy usage, with Bitcoin emerging as a champion of individual sovereignty. Addressing concerns about Bitcoin's energy consumption, Keiser argues that the energy used to secure the Bitcoin network is a vital component of its value proposition. By investing energy in the form of computational power, Bitcoin miners contribute to the network's security and resilience. Keiser views the increasing hash rate of the Bitcoin network as a testament to the triumph of good over evil, with energy being deployed in defense of individual freedom. Keiser contrasts Bitcoin with gold, highlighting the unique advantages of the digital currency in terms of portability and control. Unlike gold, which is subject to manipulation by centralized entities, Bitcoin offers unparalleled security and ownership rights. Keiser predicts that Bitcoin will ultimately supplant gold as the preferred store of value, leading to a seismic shift in the global financial landscape.
But with the Bitcoin price, because it's this new asset class that ultimately competes with gold, that means it's going to go from just under $1 trillion market cap to $10 trillion market cap. You're talking about an asset that's at 40,000, could easily go to 400,000 in a relatively short period of time. So you don't want to be the guy in the cartel who's short Bitcoin when it's about to make a 10x move. So it's very difficult to maintain that cartel in a Bitcoin scenario because it's got that huge upside potential yet. And it also, because it's redefining money as we know it. So it's going to attract, by the nature of this new digital synthetic commodity, buyers are going to essentially rule price discovery. It's going to be very difficult to keep a sell order in this mix where you've got this upward trajectory of a new asset class where the total addressable market for Bitcoin is literally $400 trillion, which is the total market cap of all investable securities, stocks, bonds, property, all derivatives, all these things taken in aggregate is $400 trillion. So, and that is potentially the total market addressable market for Bitcoin. It can demonetize. I think it's already demonetizing gold, just like gold demonetized silver, right? Used to be on a bimetal standard. Now we're on a gold standard. Silver got demonetized. Bitcoin is now demonetizing gold. It'll demonetize the property market. It'll demonetize the bond market. The bond market's a $200 trillion market. Bitcoin's not even at a 1 trillion. That's a 200x right there. So to get back to the price suppression, of course, there will be a lot of price discovery games being played with a lot of derivatives. But ultimately, unlike gold, it'll have this natural upward bias. The second thing is that gold is very difficult, and nobody really wants to stand for delivery of gold. Yes. So when you're in the gold business, it's all paper settled and it's all cash settled, and people rarely would say, I've got a ton of gold in the market I'm bidding for. I'm going to take delivery of it. I'm not going to. The gold, you've got to ship it, you've got to insure it, you've got to store it. Right? Moving gold around is very difficult, shipping it and storing it. With Bitcoin, because you don't have any of that cost whatsoever, and you control the private key, any laddered, manipulative price discovery edifice can be quickly destroyed by pulling your private key, because it's the base level of any manipulative scheme, any Ponzi scheme would have. If you can pull it, the whole thing collapses. So that's a unique attribute of Bitcoin, which gold has doesn't. Nowhere comes close with that ability either, because it's you can move $1 billion, $20 billion in Bitcoin in one, in a transaction, one transaction that's completely frictionless. It's costless. It might cost $5 to move $1 billion. So these things work in its favor against a manipulative cartel emerging to keep the price from realizing its natural bias toward demonetizing every financial asset in the world due to its superiority in every way. Well, the BlackRock is a useful idiot, right? Because they've got a lot of money and they're going to buy a lot of Bitcoin. And so for 12 years, we have front run BlackRock. This is really the first time, again, another first in history, where the average person got in there a decade before Wall Street did. Right? So when we was doing Keiser report, Bitcoin was $1. We talked about it as a new asset class. We said that it had the potential to go to $100,000. A lot of people we know bought, 1,000 Bitcoin, 2,000 Bitcoin for a couple of $1,000, right? They're sitting on 40, 50, 60 million dollars. So, and they're very appreciative.
Keiser acknowledges the growing interest of institutional investors, such as BlackRock, in Bitcoin. However, he views this development as a validation of Bitcoin's long-term potential rather than a cause for concern. By front-running institutional investors, early adopters have positioned themselves to reap the rewards of Bitcoin's continued growth and adoption. In conclusion, Max Keiser's insights offer a compelling narrative of Bitcoin's transformative impact on global finance. As a decentralized and censorship-resistant form of money, Bitcoin represents a paradigm shift in how individuals store and transfer value. Despite challenges and criticisms, Bitcoin continues to thrive as a beacon of financial freedom and empowerment. By understanding the principles underlying Bitcoin's rise, investors can navigate the evolving landscape of digital assets and position themselves for long-term success. Please like and subscribe my channel.